Next up is our panel. And again, I'm excited to introduce Michael Vaughan, and he's a venture partner with OKCFP. And for those of you who aren't familiar with Michael's background, he was the co-founder and CEO of Venmo, where he led the company from its Series A funding through strategic acquisitions and all the way through, ultimately in 2019, Venmo processing $100 billion in payments. So, Michael, I'm pleased to have you join us here today to moderate the panel.
Eric, thanks for having me. Am I on? Audio good?
Good. You sound great.
All right. Well, it's great to be with everybody today, and we have a great panel. I have the easy job. I can moderate, and all the smart people are on the panel to share some insights with you. So today we're going to have Catherine, who's president and co-founder of Kabbage, Marcus, who heads up call center operations for Freedom Mortgage, and Dan, who's the co-founder and CEO of BillGO, join us and talk to us about some of their insights with what's going on in the world today. A more relevant topic around sort of this idea of accessing information and a consumer's access to their information and the different aspects of that, and a bunch of different topics that they'll take us down. So welcome to our panel, and let's get that kicked off. Like magic. Come on, Dan. There he is.
Just like we planned it, right?
Yep. It's like we prepped for this almost. And so why don't we start with, I want to make sure we get to some of the meatier topics and have some time for some questions. So let's do brief intros, and then maybe just as a sort of icebreaker, we'll go around the horn and talk a little bit about the elephant in the room, which is the pandemic and virtual and work from home and all these things we used to do in person that we're now doing over a computer from our kitchen, or I'm on a porch right now, and how that's affected day-to-day life at the company, your business, your broader sort of strategic efforts. And so start off with a little bit of an intro. So Catherine, why don't we start with you?
Sure, thanks. I'm Catherine Petralia, co-founder of Kabbage. We provide cash flow management services for small businesses, always focused on the very small businesses. And the pandemic has changed our business entirely, frankly. But you see me right now, I'm in the office, which is a sadly empty office. If I turn my webcam around, you'd be able to see a lot of empty desks. But it's nice for me to come in here every day, and I feel like I have a routine, and that's, I think, been really helpful to me getting through this process. But everyone else has been working from home since March 13th.
Dan, why don't we jump over to you?
Sure. I'm Dan Holt, CEO, co-founder of BillGO. BillGO provides bill pay and subscription type services for banks, fintechs, and even some big techs out there. So the pandemic has impacted us, and definitely you've learned who your leaders are, and through the process, which I think is pretty interesting. People that really stand up in the challenges that we face today. I think that's been fantastic for us. We've hired about 70 people through the pandemic, which is really interesting when they've never met anybody in person, a lot of them. So we've learned to, find ways to be more efficient. Although we aren't coming in person as often, and that's a challenge, our different offices, because we have 3 different offices, are more connected now than ever because everybody's going on to, Zoom or GoToMyMeeting or what have you with video. So that's actually helped us in a way. And so we've learned to be more efficient. And I think in terms of our customers, their expectations are pretty interesting. They're getting hit pretty hard from the consumers, that they want better experience faster. That's hitting them pretty hard, and I think that's great for all of us in the tech industry.
Good. I was going to say, we're hearing that more and more. I just think there's this sort of some of this is just pushing stuff forward that was already happening. When talking about your clients, and some of it's been on the roadmap for years, and this finally caused it to jump above the line. And in some cases, it's stuff that people, just had to totally react to, and a whole new world order that they weren't planning for. So Marcus, let us know your thoughts on sort of your seat and how you're seeing this impact you.
Yeah, so Marcus Bontrager, EVP of Operations for Freedom Mortgage Call Center. So I think probably very similar to Catherine and Dan. I think we've seen a lot of resiliency in our staff. I think it was right around that March timeframe where we were kind of 98% of the staff was in an office, in a Freedom Mortgage office, and probably that following Tuesday, it was 98% everybody was remote and virtual. So learning Zoom, learning all this other stuff, that's really been a learning curve for us. But probably just much like Dan, I mean, 40% of our staff started after March, meaning that they've never walked into a Freedom Mortgage facility. We've done it all virtual, we've adapted, we've grown. And I think, probably depending on the audience here that's listening in, this is a great time to be in mortgage. Interest rates have never been lower. We have hit all-time highs. And I think really it's just how do we service our customer base? How can we meet their needs? Most of what we're doing right now in call center is rate and term refinances. So really just taking somebody's interest rate, lowering it, and kind of giving them that savings back in their wallet every month. And so that's really kind of an honor and a privilege to be able to do that for customers, especially now when a lot of people may be hurting financially, to be able to save them some money every month. But we've really adapted, and I've been very proud of my staff and just really kind of how we've adapted to this virtual thing, like what we're doing right now.
Yeah, this new world is fascinating. I mean, I've been working with a lot of early stage founders in different capacities, and some of them have built their entire team other than the co-founders in this new world. Like a couple co-founders, and then their entire staff has been hired since the stay at home. And you imagine, like, you're talking about large portions of teams. This is literally the entire company. And I'm having conversations with founders where they're like, what do you do? How do you build culture? Like the stuff where you just like overhear things, or everybody goes out to lunch together. And how do you do that when you have to like plan and wear masks, and just to get together in person is like a big undertaking. And so there's good and bad with it. They're now hiring people all over the place, literally all over the world. It's a lot easier just to say what's the difference between somebody in Colombia, South America versus Ohio versus, down the street or in the office. I think people are more comfortable with that. But the idea of all those things you take for granted from the in-person just take a lot more work. And particularly when you're talking about, big majorities of teams, or in this case, in my case, I'm seeing, entire teams from scratch. And it's pretty fascinating. So Catherine, why don't we jump into some of the, stuff we've been dealing with, particularly in your business with Kabbage. Talk to us about how Kabbage has played a role in the meeting the demands of the PPP loans, and what that's been like, and what the experience has been, and how you thought about approaching that.
Well, it was definitely much like riding a roller coaster. We had never processed an SBA loan in our history, and we're frankly unfamiliar with even the data that was used and the documents that were required. And of course, the requirements were changing early on. In mid-March, when when everything was grinding to a halt, we realized there were going to be problems when we serve small businesses, especially the smallest of the small. And to put it into perspective, of the 30 million small businesses in the US, 90% have fewer than 20 employees and 80% have fewer than 10. And that's the market we serve. So typically not served by other banks. And we wound up providing over 300,000 businesses, including sole proprietors and independent contractors, with more than $7 billion in PPP financing, making us the second largest PPP lender in the country. And I don't think we could have ever done that if we hadn't been focused on automation. So we wound up automating this entire document ingestion, classification, calculation, and submission process to the SBA. So 80% of the customers were automated. And that was really hard. And we haven't even finished the hard part yet, because now we come to forgiveness, where we have to figure out how to make sure that the businesses have done the things that they said they were going to do in order to qualify for forgiveness. So a lot of it is just pure elbow grease. Our teams worked tirelessly to make this happen, and I couldn't be more proud of them. I think, you know, at the end of my life, and this sounds kind of depressing, but I don't mean it that way, I'm going to look back and I think this is going to be the thing of which I am the most proud of, our teams and of what we did and what we're able to do for, you know, these small businesses that but for Kabbage wouldn't have had access to PPP funding at all.
Did you, with the PPP loan process, you have the existing clients, did you see, you know, how did it affect your business in terms of, you know, did it bring new clients? Did you, you know, you obviously were trying to meet the needs of your current clients. Did you see, you know, change in the sort of makeup of the client or people coming to you because you were ahead of the curve on this?
98% of that 300,000 were people we'd never met before. So we more than doubled our customer population in a matter of 3 months. It was insane. And
what got you ready for that? I mean, beyond some of the automation and you know, these are things that, you know, in my Venmo days, there were certain days of the year that we'd see this massive spike, like Super Bowl Sunday and March Madness and back to school, and you'd hit, you know, you'd have to prepare for the factory to run at 1,000 times and its normal sort of max performance, and then it took us several years to, you know, properly prepare for that, and we even knew those were coming after the first couple of years. How do you get ready for something like this?
Well, the technology was ready. That was scalable. That worked. And nothing broke in that process. We were able to handle, you know, lots and lots of volume. Some of our partners couldn't. Like, we realized we had to sign a different contract with DocuSign, for example, because they were like, what is going on with you people? Nobody needs that many contracts in a 24-hour period, you know. So there were things like that we had to fix. And DocuSign was great to work with. I'm not saying anything negative about them, but I think that was where some of the problems happened. But where we weren't ready, and we could never have been ready in a million years, is for the customer service. Everybody wanted to talk to someone way more than they ever have before. We had, now I'm trying to remember the numbers, where we normally get like 2,300 calls in a day, we had over 500,000. It was insane, and people were mad. And if you go Google it, I mean, you'll find some unhappy small businesses. But most of the folks who came to us wound up getting their PPP loan. They just couldn't talk to someone. And that's the challenge with small businesses, is they aren't familiar with these documents. They don't know about their W-3 or their 1040C or their 940. Or, by the way, I didn't know what those documents were either until I was going through this process. But so it was stressful, and everybody was scared. I mean, you're worried about, are you going to get sick? And is your business going to continue to operate? And can you get a PPP loan? And your bank already told you that they can't serve you. 100% of the 300,000 businesses that came to us had a bank account, 100%. But they just couldn't get a PPP from their bank.
Yeah, it's a good sort of lead into Marcus. I think, you know, some of the things we were talking about as we led up to this were sort of the shift in, you know, onboarding of customers, right? In the whole customer experience at Freedom and more broadly across the industries. What are some of the changes? I mean, you talked a little bit about your team and how that's changed dramatically, and how a big percentage of your team has joined in this new sort of world order and way of working. What are some of the changes you've seen from a customer standpoint? Just in, you know, these are folks that are doing the everyday thing of getting a mortgage, refinancing a mortgage, and it's changed dramatically overnight for a lot of folks in how they run the business. What have you seen from a customer onboarding and customer experience standpoint that's been impacted?
Yeah, I mean, I think, you know, our goal really at Freedom is to, you know, make sure that we keep a Freedom mortgage customer for life. So we're really kind of focused on primarily those who are currently with Freedom, and then how do we go out and acquire more customers and kind of keep them Freedom mortgage customers for life. So probably just like Catherine, I mean, once interest rates started to go down, kind of in response to this pandemic, I mean, everybody was in the money, so to speak. So one of the things that we do is we look at, well, what's our portfolio? We have 1.1 million customers that are part of Freedom Mortgage. And I think, actually, now that I think about it, customer is probably the wrong term. We have 1.1 million households. So we usually have more than one or two borrowers on a loan there. So we have really over 1 million well over 1 million customers. But when interest rates went down, a lot of them were in the money, meaning that they were eligible for a lower payment. And our main goal is to call them, proactively try to call them to do it. So just like Catherine, I mean, we went overnight just crazy here. So I was doing a town hall, which is how we try to keep ourselves engaged internally there. And I went back to where were we in August of 2019? And in 2019, we closed a little over 5,800 loans. August of 2020, we did almost 32,000 loans. So we did a 5x growth in a 12-month period. And probably just like Catherine was saying, and probably Dan is going to say next year, is really it almost is a hockey stick when you sort of look at really kind of like March, April, you know, like it was just crazy there. So it's really just, I think, working with our customers. You know, there's a lot of folks that we couldn't get in touch with them the way that we wanted to, or keep communicating with them. There, obviously, scalability is a huge part of that. So using a lot of tech, a lot of robotics, and what have you. Got to give a shout out to Urginet. You know, one of our big products, one of our FHA products, really requires a customer to provide proof of occupancy, is what we call it in the mortgage industry. And typically what that is that's a utility bill. We need to see a utility bill with your name and your address there. And so we really partner with Urginet to provide a very seamless experience for our customer base to get that utility bill. Very simple, very easy, very mobile friendly, and that allowed us to scale. I mean, how did you get to a 5x growth? And frankly, that's just till now. I think we have plans to even grow much higher than that here at Freedom. But how do you do that? How do you engage with that customer in a way where it makes it simple and very mobile friendly? That's a great example of what we've been doing here at Freedom to do that.
And the experience now is entirely virtual for Freedom. Was it always that way, or did you have in-person interactions? And I guess related to that, what are you seeing? How different companies are reacting to this in terms of what traditionally was. Fortunately, I haven't done my mortgage in a long time, and
we should talk. We should.
No, I don't need a mortgage on this house, so it's but the question is, like, I remember I just am blown away by how painful it was, and it made you like not even to the point where it was refinancing. You look at it and you go, is it really worth it? Like, do I want to go through this again? Is X $1,000? Like, I remember thinking about that, and it had to be enough. I'm like, all right, it's irresponsible not to go through the process again. Let's gear up, put on the battle armor.
Yeah.
And for me, I've always been in startups, and so I was one of these guys, post 2008. I couldn't get it. I had to sign like my life and my parents' life and my company's life away to get a mortgage, because it was post-crisis and the pendulum swung that direction. Anyone with irregular income, like which I've always been in that bucket of, there's times where you have no salary if you're starting a company, and I just remember how painful that process was, and I was in relatively good shape that I should have, I could afford the mortgage. And I just couldn't like get through the process. Like, how is that changing? Did this change anything for you? Your company directly. Have you changed how you're thinking about it? And what else are you seeing in the industry? Is this sort of a wake up call to the industry? At a larger level.
Yeah, so I think it's still somewhat painful, unfortunately. I think honestly. There's certainly been some tightening of some guidelines there. So I don't know, but what we try to do, at least here at Freedom, is, well, one is I'm in the call center, so we were virtually touchless anyhow, though Freedom Mortgage does We do have what you might think of as more of like a traditional retail experience there that obviously we had to adapt and learn and what have you. But one of the things that we really want to do is, who the heck wants to pick up a phone and talk through this, right? Like, wouldn't it be easier to kind of go online as you're kind of maybe even paying your monthly mortgage payment and make that there? So our goal was to do a 3-click application. What we wanted to do is, if we knew you as a Freedom Mortgage customer and you were in the money, again, using that term, what we wanted to do was present you an offer when you're already on our webpage and really just say, look, we already know all this stuff about you already. So we've kind of pre-filled that application as much as it is. 3 clicks and you're done and you're into our process. And then my goal was to make sure that that was as touchless and as easy as possible, where really the first voice you might hear is maybe like our loan officer confirming some things, and the next voice is, congratulations, let's schedule you to close. So
Yeah,
we've been really putting a lot of effort into doing more virtual things, more online things, and where we need documentation, like that proof of occupancy I was talking about, can we partner with companies that already kind of have this virtual thing going, and just kind of plug that into our ecosystem here. And so that's really what we've been doing there, and just making it simple, making it easy, communicating through text and email, trying to really limit the phone as much as possible.
Dan, that's a good lead in. You have a good perspective, with a lot of things you've done, but particularly with BillGO in terms of having different lens on the consumer experience. You have a consumer app, you have customers, you have enterprise clients and their customers. And so, have you seen consumer behavior change through all of this? And I know you've served on, had a director role at a bank, and so curious, and having your client view, so you have kind of the consumer and the bank view of, how are they, changing and responding to access to data. I mean, the core topic of the discussion today, a lot of this depends on, you can't do things virtual without access to the information. And historically, it's been pieces of paper and notaries and signatures and in person and IDs, and it all happened in physical form. And all of this information's out there. And I think Marcus brought up a good point. As a consumer, you get really frustrated when you feel like you're entering the same thing over and over again, right? Like, and particularly to the same company, where you're like, wait a second, don't you, like, I'm banking with you. Why do I need to do this all over again to get a card or to get, and I think this is a really key topic to making the digital experience overall, but also this idea of being able to do things that historically were in person virtually, and the access to information. So it's a couple of different questions there, but consumer behavior, how the banks are responding, and how sort of the banks are responding, particularly to the access to information. We talked a little bit about utility and sort of Urginet's focus, and there are other companies that sort of do similar things in other spaces and access to bank information. So curious to get your take on some of those issues.
Yeah, no, excellent. Well, first, I'm embarrassed because BillGO's only growing at 100%, unlike Catherine and Marcus.
You're sleeping at the wheel. Let's go.
No, that's amazing. So I think some of the biggest things, as I mentioned before, the digital experience is so critical for people, whether it's related to paying your bills, whether it's related to going to your bank, getting a mortgage, anything of that nature. We have a lot of work to do as an overall industry. We've still made it too difficult for people. People are entering information multiple times. They're entering account numbers after you just had access to my entire bill. Why are you asking me for that? I don't get it. So I think and that ties back into this sort of consumer permissioned access to data, right? Which is the heart of what Urginet can do for a lot of people. And the consumer sitting there saying, and on the banking side, we've had a lot of fights and you know the history even from the Venmo days about banking people to have access to their bank information and sharing it with third parties like a Venmo or PayPal or whomever, right? And all the fintechs have that now in some way, shape, or form. And so we're seeing that now move into even bills. We now see the CFPB getting involved, saying, hey, wait, a bill is financial data because that's directly tied to your credit report, which is directly tied to your financial wellness, which is directly tied to your access to lending, if you will. And so we're going to see that continue to rise out there. And I think it's going to go the same direction as the banks. You're going to have to give consumers access to their data. That's pretty much where it's going to go. Sure, people will fight and scream and everything else, but we need to give, at the end of the day, I always try to think about it from the consumer's perspective first, not, hey, what's this business want, or what, and everybody's going to scream compliance and security, and yes, we need to do it as securely as we possibly can. But at the end of the day, if the consumer wants or needs something in order to get that loan, if you will, from Freedom Mortgage or from Kabbage, we need to give them access to their data, period. That's all there is to it. So I think that's a big driver for people. I think the other one that we're seeing is people expect everything to happen right now. So bill pay traditionally has been something that takes 2 to 3 business days. Went from check, and then it went to this sort of over the bank rails, if you will, which is all, ACH, take 2-3 business days, go through these biller networks. To the expectation is that I want it to happen instantaneously, and I want it to happen all at once, and I want your data to help me understand where I am, right? And this is the other thing that I think expectations, don't just give me my bill, but give me insights, on that bill. Did my go up last? Did my electric go up, go down? My subscription services, what have you. So I think those are all the big things that we're seeing in the market. It was interesting. I know we were launching this huge market research with IT, and we were going to launch it back in March, April. And we decided, you know what, let's wait, let's add some questions, let's see how this whole pandemic thing plans out and see what's different. And people are foregoing some subscription services to make sure they stay on top of their loans and credit cards and all that fun stuff. So that's pretty interesting to see. But there's a report that just came out this morning from IT, 106 pages on how Americans pay their bills, if anybody's interested.
How about you read it and just send us the Cliff Notes?
Exactly. Well,
appreciate that.
They're doing a webinar.
That's one of the bonus features of the Spark virtual conferences. Dan's summary of the 106-page report. He'll send that out right after.
Yes, I'm looking forward to it,
Dan. I think the other side of this question is, how are consumers reacting to it? I know how I react to it. I want to share my data everywhere. I'm probably way too loose with it, but I prefer, I'm all about the, from my Venmo days, I want the better customer experience, but I think I'm not, I don't know if I'm the norm. I mean, when we were building Venmo, there was always this question of, this was 2011, 12, as Venmo was early days ramping up, and can you get somebody to plug in their username and password to their bank account into an app on a phone that they've never heard of before, other than the fact that their roommate told them about it. And we thought we could. Most people thought we were nuts. As it turns out, we got tens of millions of people to go along with it. But now it's just proliferating, right? Like, and we all, I know my standpoint, anytime I'm thinking about it, like, more is better, right? Like, you obviously have some of the privacy and security concerns, but when you enable some of the products and services that are being powered by things like Urginet, like Marcus was talking about, being able to more easily get access to better loan rates because this is available. But how are you guys seeing consumers react to it? Because I don't know that I'm necessarily the norm, and I have a very different lens on the whole thing. You're closer to the customers. I mean, Catherine, let's jump back to you. Like, when you see people engaging with these digital experiences that are coming from all different demographics and sort of perspectives, are people in favor of this? Do they want it, and do they have concerns around it? And are we nuts thinking that this is always a net positive? Are we, am I in the right thinking that way?
We think you're thinking right. The very first loan we made on our platform in 2010 was fully automated and required that the customer give us access to their eBay and PayPal data. That is how and if you go to we would make you a loan. And that caused a totally different set of problems, but we learned a lot from that process, and we've maintained this strict adherence to the requirement that our customers share with us data that we collect in real time from third parties, and we stay connected to that data. That's really important to our entire business model. And when we were first raising money back in 2009, we had the number of investors or potential investors, because most of them said no, the number of them who said, people aren't going to share that data with you. Who's going to give you access to their eBay or PayPal data or their checking account data? And I think the answer is, if they know they're going to get something in return, they'll share the data. It has to be useful to them. And if it is, they'll share the data. And measuring usefulness is really hard. I wound up applying for an Apple Card the other day because I was going to order the new watch, and I got this thing when I was going through Apple Pay. I was like, hey, why don't you get the Apple Card and whatever, we'll give you something. I was like, oh, what the hell? So I got one. Then I got a notification from the credit bureau that there had been an inquiry. So I logged in and I knew what it was. And there was a thing about, they called it boost. And they said, if you share your data, your utility data, your payment data, your phone data, whatever it is, then that may boost your credit score. And I thought to myself, well, that's an interesting way to market that. I didn't do it because I don't think it was going to affect my score that much. But if there's a benefit, if the consumer views there as being a benefit to that, they will share that data every day of the week. And I think people underestimate how little the value needs to be for customers to be willing to share data.
Dan, what do you think about, I've been in the middle of this from Venmo and now working with other companies where not everybody agrees with this, right? Like, maybe a bank says, hey, my job is to protect the customer's data, and the customer doesn't know what they're giving up when they give access to that information. And, the US has different sort of a different regulatory view of it, or a lighter touch view of it than, let's say, in Europe, where they took a little bit more of a heavy hand on it, and also had more sharing already to begin with. What's your sense of, and you work with some of these banks directly, yeah, and have been, seeing that side of it. There are times where they say, actually, that data, it's our job to protect the customer. That data is staying here, and we're not going to give access to, even though it's kind of the customer's data, it's our data to protect, and we don't think it's worth giving up that access. So we're going to try to get in the way of it. And I think there's some of this sort of like headbutting going on where, the consumers want access, other services want access, feel that they have a right to it, but the holder of the data has a reason to believe that they should protect that or not make that available. What's your sense there and how that plays out?
I mean, you're spot on.
It's pretty. Oh, sorry. Go ahead.
I was just going to say you're spot on with, I'm a director on a bank, and we work with a lot of banks. And so there is a ton of pressure for us to ensure that we are protecting the consumer's data. The challenge I think we have more than anything else, we don't mind if people are doing it in a secure manner. The challenge we have is when they're saving everything. We don't love that. Especially if you don't tell the consumer you're saving it, one, and if you don't tell the consumer what you're taking. It's one thing, hey, do you just need the balance, or are you pulling down every transaction for the last 2 years? Because if you just need the balance, get the balance and get out. That's fine. I think that's where the challenge comes in. And so what we've been able to do as an industry, I mean, the other side of that, from BillGO's perspective, we're trying to do everything we possibly can to ensure consumers do have access, but only, to their data, but only, do it as responsibly as you possibly can to only take the data you really need. And so what we've been doing is working out agreements with third parties that already have agreements with other banks or with the banks directly to say, hey, let's work through an agreement, or what they call a data access agreement, if you will. We can work through that together, but I think the unique part of what we're doing with BillGO is we also want the consumer to be able to make the payment.
Right.
And do that.
Part of this idea of protection is, if both parties are cooperating, it's easier to protect the information, right? If one side or the other is not cooperating, you end up in situations where the access isn't secure. It's not through the sort of front door channel that it's intended to be. And it's all in an effort for the consumer to get at data that they believe they have a right to and they own, because it's their information. And the question then becomes, how much should they be required to, right? Because I think some of the issues that come up, and I think this is true with bank information or utility information, and some of that's because they don't want to, and they have the tech, but they don't want to. Some of it is they don't have the tech, and how much should we require that as an industry or as a regulatory environment, that, hey, if you're storing information about an individual, you have to build the access to it because it belongs to them and they need to be able to get at it. And some of it's just a technical barrier right now, not necessarily that may be the case more with like utility information that may be a little further behind. So I think that's a pretty interesting sort of lens on it. Go ahead, Catherine.
I think there are two sides of that coin. On the bank side, the issue at the end of the day is they're liable. If there is a breach, it's the bank's liability. It's not the fintech's liability. And so I think we need to figure out a way to solve for that and take that conversation off the table. So, but the other side of it is, if you remember in the 90s, if you wanted to change your carrier, you had to get a new phone number. And it required legislation that forced the carriers to allow you to carry your phone number with you. And that required and forced them to be more competitive because it was harder for them to keep you. And I think this bank data is very similar. I have had the same bank account with the same crappy bank for the last 10 years, and I don't change it because it's a pain in the ass. I don't want to, what if I forget to move my automatic payment of my life insurance? And then I don't have life insurance now because I forgot to do that. And if that data was really easily accessible by another institution, then I could suck that in and tell me what I need to set up, and then I could maybe go to another bank. Now, obviously, it's not in the bank's interest to do that. And so but having said that, I do think it's really important for consumers to have access to the ability to change banks easily.
Little known fact, I was at a company in San Francisco called Telefia, which was a competitive intelligence provider for the wireless industry at the time number portability happened, and I could wax poetic about the the efforts of number portability and that whole process. So I know exactly what you're talking about. And that is exactly what needed to happen, because it was in the carrier's best interest to make it hard, because that forced people to stay because they wanted to keep their number. So I think I think what do you think are some, and we'll jump to you, Marcus, and then I think we can probably open up to questions. We have 5 or 10 more minutes here if there are people, if we want to get some questions from the audience, if there are any. I guess we can take 1 or 2 of these, and maybe just do a quick round the horn. Give a quick 1 or 2 bullet on what do you think the most critical concerns are facing your business and the industry, and maybe even related to this sort of data access and access to consumer information, and given the broader sort of challenges of the what's going on in the world. And then what is the most exciting? So on the flip side of that, what are you most excited about? What are the most exciting trends that you see over the next 12, 24 months? Marcus, why don't we start with you?
Yeah, I think one of the things that I think probably some of the challenges or things that we need to do is really kind of continue our digital presence. We need to grow that. We need to scale that. I think we're probably, maybe as an industry at whole, as like Dan said, right, we're probably behind the curve of where we need to be. We're certainly not Amazon-like if you want to get a mortgage. So that's certainly an area there. But and then I think the thing that makes me most excited here is just certainly like our scalability and our ability to really kind of grow and expand here. I think that's a unique challenge, but also one that, with really great partners and some of this digitization and making, data, consumer data, a little bit easier to ingest, I think we can really make some big shifts here in the mortgage industry. And I'm kind of excited about that and where we're going to go.
Catherine, what are your thoughts?
I think what we're going to see more of happening is these big tech partnerships with institutions where the products themselves are delivered through other companies, whether you're talking about the Amazon Chase tie-up to offer checking accounts, which we haven't seen yet, but they've talked about. I think those are the kinds of relationships that are going to happen, and we're going to see, and this, sorry, is maybe a bit of a bummer if you're a bank, but I think we're going to see banks, even though they've worked really hard and done a great job during the last 6 months to deliver digital products and services to their customers, I think they're going to become more of utilities because they're going to be used by these, fintechs as the pipes, the money movement pipes and the regulatory pipes to deliver the products and services that they can better deliver because they're more innovative. And obviously I'm talking from that perspective, but we're seeing more and more of that. And even the OCC's, guidance about how to regulate and how to allow fintechs to get the appropriate licensing to deliver those services, the government even is moving in that direction. So I think that's what we'll see.
Yeah, I think for us, the two bullets, one on that consumer permission data, I think that has to be solved, and that's going to come more and more to a head, not just from the banking side, but also from the bills, because that's part of their financial data. So it's something we need to solve as an industry, and especially in the US. I think the one that excites me the most is it's kind of the overall acceleration of consumer expectations. They expect everything to happen instantaneous now. They want a confirmation number. I want my data right there. I want access to it. I want to choose the way I want to pay, and they expect some kind of intelligence. So that excites me the most because that's what a lot of us on this call and, probably a lot of the attendees, that's what we're focused on, right? Is giving people a better consumer experience across the board. So I think that's that could sort of force that to accelerate.
So I got a couple things from the audience, and one thing that I should do, since otherwise I won't collect my paycheck. Marcus was the only one that worked Urginet organically into a response, so I need to. And I think there's probably some interest around, like we talked a lot about the banks and some of the utility data. Like, how are you, Dan and Catherine? Dan, we'll start with you. Is specifically with Urginet and some of the information they in the tools they give you to provide these services to your clients, to the customers. Have you been using that? What are what are the things that you've seen that are made possible by similar to what Marcus was talking about, where they created a better experience by being able to verify residency using this kind of tool? What ways are you seeing the ability to use this kind of information in this kind of tool?
Sure. So if you think about it from the bill pay experience, whether it's a bank or fintech, doesn't really matter, big tech, but giving people the ability to access their bills rather than go through the process and get your paper bill or your electronic bill, retype in your account number, amount due, and all that. If you could pull that and automate that for someone, which is what you're able to do with Urginet, that makes a huge impact.
So for Kabbage, when we started working on PPP and we knew what the requirements were and how the funds had to be used to be eligible for forgiveness, 60% for payroll, 40% for rent/mortgage and utilities, one of the first calls we made was to Urginet to say, hey, how can we use this data to automate the forgiveness verification process? And so from our perspective, it makes it easier to be able to get that data directly and digitally and in real time so that we can more quickly get through the forgiveness process for our customers.
I'm curious, from your different perspectives, what are some of the things that don't exist yet that you think need to change in terms of this idea of helping traditional sort of offline businesses get more digital and get more virtual and get more real time and instant, right? Which is what the consumer wants, and that's not, that's going to continue to be the case. And so, Marcus, is there pieces of the business where you say, yeah, we've made huge progresses on certain aspects, and then there's other parts that we still really struggle with, and there's a missing piece, and maybe there's a way to bridge that gap down the road as we continue to make progress in this way?
Yeah, it's really just I think for me, for me to do what I want to do, right, I really kind of want to be in my system, right, and be able to have that be fairly seamless to my staff. So I think we rely a lot on APIs, and where we can't integrate with either various data partners or what have you, that really is kind of a challenge, right? So what do? You kind of have to throw a human in between that to try to get some information in there. So I think one of the challenges that we see is really just making sure that there's the kind of a robust API integration, so that that data is flowing in and out with our various providers or what have you there. And then just really kind of, I don't know if I've cracked the nut for Freedom Mortgage here just yet, in terms of, how do we then communicate back to that customer? This is where you're at, this is what you're doing. And we've kind of tried your pizza tracker idea, right? Where it is. That's a great idea, but just, I don't think it really is where I think most customers want to be. So we need to do a better job of just communicating where they're at in the process. So I think some of the pain in mortgage has been around just the unknown, like, where am I really at here on this? And we just need to be able to expose that a lot easier and to be able to do. So I know I kind of jumped around a few things there, but I would say kind of challenge API, small business, where we're trying to get data. We really probably need to enable smaller companies to be more API friendly, and then how do I expose that back to the customer in kind of a seamless, this is overall where you're at.
Catherine, Dan, do you have any ideas on that front of areas where we've made all this progress in some areas, but other areas where you feel like we're still not meeting the needs of the customer, whether it be an individual or a small business in your case, that we could do a better job of if only we had X, right? Fill in the blank, that we haven't been able to sort of bridge that gap yet.
I've been saying the same thing for 10 years, literally 10 years, and talking to this federal agency, which is the IRS. So, there were, the PPP is an example, but I've needed this data forever. We are using all tax data in order to make the determination about eligibility for a PPP. And all of that data lives at the IRS, and none of it was provided to us directly. Our customers had to scan and take photos and talk to their accountants and get their stuff. And it was a complete disaster for so many of these businesses, where if I could have just gone directly to the agency and gotten the data, I could have mitigated fraud risk, because I would have absolutely known who these people were. And I could have, number two, verified exactly what the numbers were, so I could eliminate any false claims. We had tons of fraud attempts, and I'm proud of how we, were really able to cull all of that, but it took a lot of work. And it could have been so much easier if we could just get that data directly from the government.
Dan, who do you know at the government you're going to take care of that for?
Yeah, I'll jump right on it. So I would say, yes, we have a similar challenge as it relates to access to data. We talked about that a bit already. I'd say the other area that we're making progress, but it's still taking way too long. So if you look at consumer bills, we're still looking at about a quarter of them go out via check. Physical check goes in the mail. Even when you go through and you type it in somewhere, it's still going through that process. And we have 4.2 million businesses in the US, and only about 15,000 of them are on electronic directory. The rest of them they receive checks. So it's we're signing up hundreds a month, which is great, but it's going to take a lot more than that to get them there. So I think we can we would love to see more progress, both from the consumers pushing it back to the merchants, if you will, that, hey, look, I want to be able to pay you electronically, as well as them coming on board to join electronic directories. Something else we'd like to see.
I think that's a great one to wrap up on. So thanks, Catherine, Marcus, Dan, for all your time. And hopefully we shared some good insights. I learned a ton, so appreciate you sharing everything you've done today, and glad we were able to pull this together for the group.
All right, awesome. Thank you.
Thanks.